This video is about how to make lots of money online from day trading. It goes into depth on the best way to do it and what you should be looking for before entering the world of trading. The first thing that you need to know about day trading is that it's not for everyone. If you are new to this market or feel like things are too risky, then stay away. There are still plenty of other ways that can help grow your portfolio through online investing. However, in this video, you will find the best way to get started. Investing in the stock market can be a fantastic method to make money, especially in today's economic environment, when savings accounts and long-term banknotes don't pay much interest. Stock trading isn't a risk-free venture, and some losses are unavoidable. Stock trading may potentially be extremely lucrative if done intelligently, with adequate study and funds invested in the market. Where to get started? You need to keep up with the latest trends like a hawk. There are several valid sources that cover market developments. You might want to get your hands on a stock trading magazine like Motley Fool, The Economist, or Bloomberg Business Week. Next, select a trading website. Scottrade, TD Ameritrade, and TradeKing are among the most popular US brokerage, while IG in the UK, Hargreaves Lansdown, and Interactive Brokers are some of the best rated providers in the UK. Before you decide on a site to use, be sure you understand any transaction fees or percentages that will be charged. Make certain the firm you're using is reputable. You may want to do a Google search for customer feedback and read reviews on the company. Then consider a service that has amenities like a mobile phone app, investor education and research resources, low transaction charges, understandable data, and 24-hour customer support. Test the water. Create a trading account with one or more brokerages. You're unlikely to need more than one, but it's useful to have 2 or 3 so that you can focus your attention on the site you prefer. Make certain you understand the minimal balance requirement for each site. If you don't have a lot of money, it's difficult to open accounts on more than 2 or 3 websites. For example, you may choose to start with a modest sum such as $1,000, which would limit you to particular trading platforms since others have higher minimum balances. Before you risk any actual money, practice trading. Some websites, for example, provide a virtual trading platform where you may experiment and evaluate your instincts without putting real funds at risk. Of course, you can't make money this way, but you can't lose either. Trading in this manner will help you become familiar with the procedures and sorts of decisions you'll encounter when trading, but it's a poor imitation of real trading. Virtual money does not represent real money. When you buy and sell stocks in the real world, there will be a delay, which might lead to varying prices than you intended. Furthermore, trading with virtual currency won't teach you how to handle the stress of trading with actual cash. Choose solid stocks. You have a lot of alternatives, but you should always aim to invest in companies that dominate their market. Provide something that people constantly desire. Have a recognized name and brand. And have a solid business model with a long track record of success. To figure out how profitable a firm is, look into its public financial statements. A more successful firm usually translates to a more lucrative stock. By looking at a company website and looking for the most recent annual report, you may discover complete financial information about any publicly listed firm. You want to do the following. Examine the company's leadership, operational expenses, and debt. Examine their balance sheet and income statement to see if they are profitable or have a good chance to be in the future. Examine the company's worst quarter to see if the potential for gain outweighs the danger of reproducing that period. Examine the stock history of a particular firm against its peers' firm's performance. If all technology companies were down at one point, comparing them to each other rather than to the market as a whole might help you determine which company has consistently outperformed its competitors. Investigating how a firm's earnings conference calls are going, start by reading the company's quarterly earnings announcement, which is published on the internet an hour before the call. Time to take the plunge. Purchase your first stocks. When you're ready, go for it and buy a few safe stocks. The number will vary depending on your budget, but aim for at least 2. Companies with a good reputation and long histories of trading are typically the most steady equities, making them an excellent place to start. Begin trading little and risk as much cash as you are prepared to lose. It is acceptable for an investor to begin trading with as little as $1,000. All you have to do is be cautious about high transaction costs, since they can quickly devour your profits if you have a small account balance. Invest in mid-cap and large-cap companies. Mid-caps are firms with a market value between $2 billion and $10 billion. Large-cap corporations have market values of more than $10 billion, while small-cap companies have market valuations of less than $2 billion. The stock price is multiplied by the number of shares outstanding to get a company's market capitalization. Monitor the markets frequently. You must check on a daily basis, and the basic rule in stock trading is to buy low and sell high. If your stock's value has soared significantly, you may wish to consider selling it and reinvesting the proceeds into other, less expensive stocks. Consider mutual funds. While we're talking about day trading, it's worth mentioning a bit on investing. You should consider mutual funds as part of your strategy. They are actively managed by a professional fund manager and include a variety of stocks. There are many investing possibilities. Investments in such industries as technology, retail, finance, energy, or international firms will be diversified. Understand the basics of trading. Remember to buy low. When price levels are at a relatively low level based on previous history, you buy them. Of course, no one knows for sure when the prices will rise or fall. That's what makes stock investing so intriguing. Look at a company's earnings per share as well as employee buying patterns to see if it's undervalued. Look for businesses in fast-changing sectors and markets where you can make a lot of money. Sell it high. If you sold a stock for more than you bought it for, you made money. The greater the difference in the price between when you acquired them and when you sold them, the more money you make. Do not sell in panic mode. When a stock you bought drops below the price you paid for it, your natural impulse may be to sell it. While there's a chance it might keep declining and never rise up again, you should consider the likelihood of a comeback. Because you commit to your loss in the process of selling for a loss, this isn't always the wisest. Study the fundamentals and technical analysis. The first is identifying a stock's value at current prices. This involves estimating what the future price stock of a stock will be based on its present price and other variables. The second approach, known as technical analysis, looks at past data to forecast stock movements. Fundamental analysis considers a firm's mission, personality, and reputation, as well as who runs it in order to make judgments about it. This study tries to put a real dollar value on the company, and by extension the stock. A technical analysis examines the overall market and what motivates investors to buy and sell stocks. This entails analyzing trends and studying investor reactions to happenings. Many investors employ a combination of both strategies to make educated investing decisions. Invest in companies that pay dividends. Income investors, for example, invest almost entirely in dividend-paying equities. This is a method to make money from your stock investments even if they don't rise in value. Dividends are a form of company profit paid directly to stockholders every 3 months. It will be entirely up to you whether or not to invest in these firms based on your own investing goals. This is just the beginning of understanding day trading, but we wanted to share with you the solid fundamentals to ensure you can start on the right foot and earn a lot of money on the way. If you want to know more, be sure to subscribe for our weekly videos on how you can earn your way to wealth.